Tesla's India debut hits a speed bump, and tariffs might be the culprit. Tesla's much-anticipated entry into the Indian electric vehicle (EV) market hasn't exactly gone as planned. Since launching in July, the company has received just over 600 orders for its Model Y, a figure that pales in comparison to Tesla's global delivery pace, which sees that many vehicles shipped every 4 hours during Q1 alone. But here's where it gets controversial. The steep price tag of the Model Y in India, over 6 million Indian rupees, approximately $69,751, has raised eyebrows. That's nearly triple the cost of most EVs currently available in the country, which hover around 2.2 million Indian rupees, $24,966. According to Bloomberg, this pricing disparity is largely due to hefty import tariffs, which have made Tesla's vehicles significantly less competitive in a price-sensitive market. Despite the lukewarm reception, Tesla isn't backing down. The company plans to ship between 300 and 500 vehicles from its Shanghai facility to India in 2025, with the first batch expected to arrive this September. Target cities include major urban hubs like Mumbai, Delhi, Pune, and Gurugram. Tesla had originally projected an annual delivery goal of 2,500 units for 2025. And this is the part most people miss. While premium EVs have started gaining traction in India, accounting for over 5% of total car sales in Q1 and Q2 of 2025, the global picture tells a different story. Only 2,800 high-end EVs, priced between $51,038 and $79,393, were sold worldwide in the first half of the year. This slump is widely attributed to the lingering effects of tariffs introduced during Trump's administration, which have disrupted international EV trade. Tesla has taken steps to establish its presence in India, opening its first showroom in August and beginning the rollout of supercharging stations in Delhi and Mumbai. Plans are underway to expand into southern India next year. However, the company's strategy of relying heavily on brand recognition, rather than localized marketing, may be limiting its reach in a market that demands more tailored engagement. Globally, Tesla is feeling the heat. Sales in both China and the US have dipped by 13%, largely due to tariff-related pressures. The company remains hopeful that future reductions in tariffs will help ease these challenges. Meanwhile, trade negotiations between India and the US have intensified, especially after a reported 50% tariff hike on Indian goods, according to Cryptopolitan. Tesla had also pinned hopes on an India-Europe trade agreement that would allow for more affordable imports from its German plant. However, that deal remains stalled, adding another layer of complexity to Tesla's international strategy. Here's a deeper issue that's sparking debate. Trump-era tariffs have cast a long shadow over India's export economy, threatening nearly 55% of its $87 billion trade with the U.S. Key sectors like agriculture and textiles have been hit hard, with many local manufacturers forced to lay off workers due to declining orders. The Indian rupee hasn't escaped unscathed either. Currently trading at 88.16 Indian rupees to the dollar, it's down 0.19% today, and has weakened by 0.6% over the past week following the August 27 tariff announcement. Year-to-date, the currency has dropped by 2.3%, reflecting broader economic uncertainty. Meanwhile, Tesla's rival BYD is quietly winning the race. Chinese EV manufacturer BYD has outperformed Tesla in India, selling over 1,207 SUVs in the first half of 2025. With a starting price of $55,567, BYD has managed to navigate the tariff landscape more effectively, proving that competitive pricing is key in India's cost-conscious market. The report suggests that Tesla's future success in India will hinge on its ability to adapt its pricing, marketing, and distribution strategies to local realities. Tesla's stock is also feeling the pressure. It's down 3.5% today, with a year-to-date decline of 17.3%. That said, the company saw a 7% bump last month thanks to a brief sales surge. Tesla shares are currently trading at $333.87, with a market cap of $1.05 trillion and a 12-month trading range between $207.03 and $488.54. In China, Tesla's market share is slipping. According to Cryptopolitan, The company sold fewer than 40,000 units in June, down from 57,000 the previous year. Tesla now holds just 4% of the Chinese EV market, while BYD commands a dominant 29%. So what's the real takeaway here? Tesla's global brand power isn't enough to guarantee success in every market. In India, where affordability and local engagement matter more than prestige, the company faces an uphill battle. Is Tesla's premium pricing strategy out of touch with the realities of emerging markets? Or will its long-term vision eventually pay off? We'd love to hear your thoughts. Is Tesla making the right moves in India? Or is BYD setting the smarter example? Drop your opinions in the comments whether you agree, disagree, or have a completely different take.